In a world where the lines between right and wrong are often blurred, a story emerges which sounds straight out of a crime thriller, but this is no fiction. It's a tale of HSBC, one of the world's largest banks, caught red-handed, laundering money for the most dangerous of all clients, Mexican drug cartels. Buckle up as we dive into the murky waters of international finance, where morality is often traded for money, and discover how deep the rot goes. But first, a glimpse into HSBC's structure. HSBC's story begins in 1865 in the bustling trade hubs of Hong Kong and Shanghai. Founded to finance the growing trade between Asia and the West, HSBC quickly became the cornerstone of global banking. Fast forward to the present and you'll find HSBC operating in scores of countries, its name synonymous with international finance. As a leading global bank, HSBC weathered wars, global depressions, and the rise and fall of empires, establishing itself as a titan in the world of finance. In recent times, it unfortunately began to play a role in a darker global narrative. The turn of the millennium saw the bank embroiled in scandal. Investigations revealed that HSBC not only failed to prevent money laundering, but had actively participated in it. This was no calculated oversight, but a calculated business decision that fattened the bank's coffers with billions in fees. The laundering of money between HSBC's accounts revealed a company strategy that seemed to prioritise profit over principle with very little regard for the law. The alarm bells regarding HSBC's practices began to ring long before the story broke into the public consciousness. In as early as the 1990s, concerns began to be raised about the bank's lax approach to funds flowing through its accounts. Despite these early warnings, HSBC continued to engage with questionable clients, seemingly turning a blind eye to the origins of the vast sums flowing through its accounts. The most damning evidence came to light in 2008 when the US Office of the Comptroller of Currency, the OCC, issued a warning to HSBC about potential money laundering activities. This was followed by a Senate investigation in 2010, which led to a report in July 2012 explicitly detailing HSBC's negligence. The report accused HSBC of exposing the US financial system to a barrage of money laundering, drug trafficking, and terrorist financing risks due to lapses in their anti-money laundering controls. It wasn't that HSBC just failed to close the loopholes. It was found that the bank had actively reconfigured its operations to better serve the needs of its drug dealing clients. In Mexico, where the presence of drug cartels was pervasive, HSBC's Mexican branches went so far as to actually modify their teller windows. These were made much larger to accommodate the bulk cashier boxes used by drug gangs to deposit hundreds of thousands of dollars in cash daily. This physical alteration to the bank's infrastructure just hints at the level of complicity and willingness to accommodate the drug cartel's transactions. Furthermore, HSBC also engaged in a practice known as stripping. This is where they deliberately omit incriminating information from wire transfers, which prevents regulators from connecting the dots to the illicit sources of the funds. The bank also offered a range of services that would ensure that clients could move money around the global banking system anonymously. HSBC's Swiss banking arm, for instance, provided secretive accounts, allowing their client to shield their identities with no questions asked. The bank's international reach and reputation for discretion made it an attractive institution for drug traffickers to cleanse their tainted riches. By turning its compliance units into rubber-stamping entities, HSBC did not just ignore the red flag, it constructed a financial freeway for cartels' dirty cash, undermining international efforts to clamp down on the global drug trade and its finances. The numbers. The scale of HSBC's money laundering operations was not just large, it was staggering, dwarfing the economies of many small countries. The figures involved give a sobering perspective on the extent that HSBC was intertwined with the illicit underworld economy. At least 881 million was confirmed to have been laundered specifically for drug cartels. This figure, while already colossal, is likely just a fraction of the true total, as it represents only transactions that were caught by the investigators. This money, originating from the violent drug trade, was cleansed through the bank accounts, effectively obscuring its bloody origins and integrating it into the legitimate global financial system. The operation's sheer magnitude is further highlighted by the $7 billion in bulk cash deposits at HSBC Mexico branches accepted across 2007 and 2008. Now, these deposits were made in US dollars, the preferred currency for international trade, including the trade for illegal narcotics. The fact that such large amounts could be deposited without raising any concern speaks volumes about the level of complicity. In addition, HSBC engaged in over $19 billion of US dollar purchases. This is the purchase of US dollars from Mexico via HSBC, a staggering figure that indicates the bank's deep entrenchment in facilitating huge, unexplained volumes of currency exchange, which is often a red flag for money laundering activities, but clearly not for HSBC. Now, these transactions should have set off alarm bells as they exceeded logical expectations for legitimate business needs, suggesting that they were instead serving the illicit financial flows of criminal enterprises. And lastly, the enormity of the HSBC oversight, if you want to call it that, is the $668 billion value of wire transfers that the bank allowed to move across its borders without any proper monitoring. This astronomical sum is reflective of the bank's role in the unchecked movement of money. Such a lack of oversight provided an open highway for money launderers to move their funds rapidly and with little risk, friction or detection. In the wake of these revelations, HSBC faced repercussions that would be considered severe by conventional standards. Yet, when weighed against the gravity and scale of the offences, they appeared to be little more than a slap on the wrist. The bank agreed a settlement figure of $1.9 billion after admitting to its role in money laundering for drug cartels and violating US sanctioned laws. This amount, whilst one of the largest ever imposed on a bank, was a mere fraction of HSBC's annual profits and was simply absorbed by the bank as the cost of doing business. But what was more striking was the absence of individual accountability. Not a single HSB executive faced jail time, not one. The outcome sends ripples of concerns across society about the efficacy of the legal system in holding the powerful to account. It suggested a world in which where financial institutions can engage in criminal activity with impunity, knowing the profits of their actions will far outweigh any penalties given. Now, if a regular citizen was caught laundering just a minuscule amount of the sums that HSBC did, they would face the full arm of the law and likely go to jail. Did HSBC learn this lesson? Absolutely not. As recently as 2021, the Financial Conduct Authority of the UK, the FCA, fined HSBC £64 million for inadequacies in its anti-money laundering processes. Even though the bank gave assurances that it would completely overhaul its financial controls, this was still able to happen. The HSBC case exemplifies the need for wholesale change. It's clear that the fines alone are not enough to effect genuine reform or to affect the integrity of the financial system. If the goal is to prevent money laundering and myriad crime that it facilitates, then the consequences for such actions must be more than a monetary slap on the wrist. A shift towards holding individuals accountable, including executives, who preside over systemic violations, might create a deterrent that is currently lacking. In addition, there must be an emphasis on creating a robust and transparent systems within banks so they do not merely tick regulatory boxes, but actively seek to prevent financial crimes. The too big to jail mentality undermines the financial governance and the rule of law. It suggests a two-tiered justice system where the wealthy and powerful are insulated from the legal consequences of their actions. For the health of the global economy and the society it serves, this notion must be challenged and a path to meaningful accountability must be forged. Only through such wholesale changes can trust in the financial system be restored.